Welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm Seema Modi, in for Bob Pisani. June is upon us, and a new fund has come to the market just in time for Pride Month. 2 weeks ago, LGBTQ Loyalty Holdings and Procure AM launched a new ETF, ticker symbol LGBT, on the NASDAQ. The fund is the first of its kind to incorporate LGBTQ community survey data into its approach, identifying the top 100 U.S. companies that most align with the community's goals. So how does it work, and how does it speak to the broader trend of ESG investing that has been red hot this year? Let's ask the man behind the new launch, Bob Toole, co-founder and president of Procure Holdings, plus Tom Lydon, CEO of ETF Trends. Tom, start with you. Your thoughts on this new fund?
Well, it's coming at the right time. We've got some great people behind it, as we mentioned earlier, Seema. When you have Congressman Barney Frank, you've got Martina Navratilova, you've got a real strong group of advocates for this, for the right time. And I think those things are going to be key and critical to what's going on in the future. If you get a spokesperson like Martina Navratilova or Barney Frank talking about the importance of these values within the corporate community, people will pay attention. And the way that this is set up to have the 100 largest companies that are behind these types of values, I think there's going to be a lot of pull for it.
Bob, you're the one who made and launched this fund. Tell us about it and the timing of this launch as well.
Well, the timing obviously is very good. We made sure that we tried to get the thing launched ahead of time, get the market, if you will, perceiving the index and the ETF to be of value to the community. And then I think the other thing is really important is that the members of the community are very loyal. And so there's a sentiment component to this index, which is kind of missing if you kind of just do your quantitative analytics associated with, traditional index construction methodology.
And I want to bring in Andrew McMorand, Managing Director at Wallach Beth Capital. Andrew, good to have you on ETF Edge today. Your thoughts on this intersection now, more younger clients, investors who perhaps are looking to match their social governance goals with investing.
Yep, and thanks, Stephen. That should help a lot. It's good to be on. I also think if you're talking about young people, let's talk about the talent and where these people are going to work. I think that's an underlying thing that's going to drive this in the long-term future, right? So as an individual and as speaking for Wallach Beth, we're full supporters of equality in the workplace and in life for all people, right? Now, think about the CTF. If these companies are supporting no exclusions in a diverse workplace, well, they're going to attract top talent. And top talent means a company performs better. And that's really the kind of hidden thing in here that's going to drive better performance. There's a Nuveen survey that came out a few months ago that showed performance is actually the #1 factor in selecting an ESG investment. So, this should do quite well in the long term, given that. We're full supporters of it.
Bob, how did you decide which companies are prioritizing inclusion more than others? Is it looking at board representation, or are you going beyond that?
Well, let me just first respond to Andy's comment, because he's absolutely right. The index is currently outperforming the S&P 500 and has been since the day we launched it in November of 19. So the index itself is doing, I think, what it's supposed to do, and it's measuring people's sentiment towards companies and the values that they, in essence, exhibit to the marketplace. The structure started out with over 1,000 securities, and then the first thing we did was screen them for inclusion in ESG using the UN standards. And then the second thing is we went out and we contacted members of the community. We hired Harris Poll, and the Harris Poll staff went out and surveyed as many people as they felt would be statistically significant. And from that, we drove the weighting of the selections of the company.
Understood. Clearly a comprehensive process used. Guys, let's switch gears to the reopening story. The jury is still out as a great debate over inflation rages on. Commodity prices have surged as lockdown measures ease, and demand races higher for everything from lumber to soybeans, sugar, and even rubber. But one precious metal appears to be sitting out on this major melt-up, and that is gold. Tom, tell me what is happening here. Gold was supposed to be the greatest inflation hedge. What's gone wrong?
Yeah, well, I think there are a couple key things here, Seema. First and foremost, people don't need gold right now. They need everything else. They need base metals. They need oil and gas. They need agriculture, corn and wheat. And all these commodities are really key to what's going on right now. We have problems in the pipeline. Things aren't arriving on time. So it's a demand issue for sure. And we're also in the situation where people are increasing prices. We're seeing that at the supermarket. We're seeing it at the pumps. We're seeing it in supermarkets as well. So all those things aligned doesn't bode well for gold. Gold's kind of flat this year when you take the largest commodity fund, DBC, which is the Invesco Optimum Yield Diversified Commodity Fund. That's up over 27% this year. And one other thing about gold, I think it's kind of taken it on the back based on what's going on with Bitcoin. I just got to Miami this morning. I'm going to be at the Bitcoin conference. They were expecting 2,000 people 6 months ago. They're going to be over 10,000 people here. Right. I think it's taken a little bit of the luster out of gold.
That's so interesting. Andrew, your thoughts on this sort of phenomenon, especially the correlation, if there is, between Bitcoin and gold. That is, Bitcoin way up this year and gold is down.
Right. Let's think about the extreme. So gold's actually caught a little bit of a rally, if you notice, in the last 2 weeks, really in lockstep with the correction in the cryptocurrencies, right? Think about the volatility. We feel our institutional investors who are obviously starting to get involved in cryptocurrency, or at least thinking about it, then they get their first taste of a real decent, which is a 50% correction. A lot of people don't want to stomach that, even as an inflation hedge. So the more that those happen, I think it trickles back in. And just think of the extremes, right? When cryptocurrencies are down, people are like, oh my gosh, it's a scam, it's whatever. And then when cryptocurrency rallies, everyone's buying it because they're like, hey, it's going to take over Bank of America, right? Now, both those things aren't going to happen, right? It sits somewhere in between that. When gold rallies, it's like, hey, is it too high? What's the inflation hedge? Do I use it for anything besides a store of value? And when gold is down, people go, hey, maybe now is a good time to get in a precious metal that's been around for 5 years.
I guess the question is, are you making changes to your portfolio right now? Do you have clients who are telling you, Andy, you know what, I want less exposure to gold?
I actually think our clients think that there could be a little bit of a pop here. We've seen some buying. IAU did a reverse split, which is a big gold ETF, and I actually think this could probably get near. It's actually near an all-time high. It just doesn't move as fast, right? So I think it could hit that $2,000 level pretty soon.
Tom?
Well, I think there's always demand for gold. It makes sense to have diversity in 3 to 5% in your portfolio. But as you probably know, Seema, there's a line around the block at the SEC with people having applications for Bitcoin ETFs. It's going to be very interesting to see if that happens, because then you can buy through your Schwab or your Fidelity account. You can buy Bitcoin and trade it through your brokerage account. That would be fantastic, and I think that's going to be coming sometime soon.
Something we're looking for.
That would put some pressure on gold. I agree with that, Tom.
Okay, well, there you go. That's what makes a market. Gentlemen, thank you. And that does it for us on this week's ETF Edge. I'm Seema Modi in for Bob Pisani. You can find all of our latest videos right here on our website, etfedge.cnbc.com. We will see you next Monday. Have a great week.
Get the ABCs of ETFs with the ETF Edge newsletter, your weekly update on the hottest trends in the nearly $4 trillion market of exchange-traded funds, expert analysis, actionable ideas, and exclusive insight from host Bob Pisani. Sign up now at cnbc.com/ETF Edge newsletter.